Hello friends, welcome back to another stock value video. Today guest is Intel compression. As you can see on the chart, starting from August 2nd, Intel dropped from $79 straight down to 21. From that point until about 1 year later, the stock moved back and forth winning this range. A clear zone formed between $17.68 and $18.86. The stock tested this area multiple times, around 7 or 8 times, and finally managed to move upward. On the other side, there was also a resistance zones during that years. Basically, Intel spent an entire year bouncing between this support and resistance level. For those who traded it well, it was a profitable range. For example, buying from the dip and selling near 25 gave about 30-34% profit. Intel offered multiple buying opportunities during this period. To understand where the Intel could go next, we need to look further back. On the chart, we can see a descendant channel starting from April 12, 2021. This channel was tested several times, including on December 27, 2023, and almost recently on the last Friday close when Intel reached $37.83. Now let's clean the chart and see the short-time outlook. When we draw a Fibonacci retracement, Intel looks like it has already passed this first level. Next week, next week we will see if Intel can test $42. If it fails to reach 42 and pull back, then the Fibonacci levels and Bollinger Bands will be key to watch. Possible next target on the upside are $45, $50, and even 54 if momentum continues. Looking at indicators, momentum has been climbing day by day, although there was some weakness after $26.50. RSI is still the positive zone, which is mean upward trending is intact for now. The important point here is breaking out these correction channels that has been in place for 3 or 4 years. If Intel can break out, the resistance levels ahead may turn into support. Will Intel surprise us and give investors a nice gift, or we will something different? We will find out in coming sessions. That's it for today's Stock Valleys video. See you in next one. Take care.